Hey there, did you know banks can actually create money out of thin air? No magic wands or Hogwarts spells required. Just a few clever moves with your dollars. It sounds wild, right? Like, where did my money even come from if the bank just made it up? Alright, imagine Bob walks into a bank with $100. He's feeling rich and decides to deposit that cash. Now, the bank has Bob's $100 sitting safely in their vault, but here's the twist. The bank doesn't just tuck that $100 away and wait for Bob to take it out. Nope. Instead, they use it to lend to Alice, who wants to start a lemonade stand. So Bob's $100 is still in the bank, technically. But the bank also gives Alice a $90 loan to buy lemons and sugar. Alice's got money to spend. Bob's money is still in the bank, and suddenly, there's $190 floating around the economy. How is that possible? This is where the magic of fractional reserve banking comes in. Think of it like the bank needing to keep only a small part of the money they get, say 10%, locked up, while the rest they can loan out. So, from Bob's $100, the bank keeps $10 in the vault and loans out $90 to Alice. Alice spends her $90, maybe paying Charlie, who then deposits that money back into the bank. Now the bank can loan out most of that $90 again. This cycle keeps repeating, creating more and more money with each loop. It's like a money multiplier effect. But wait, how can the bank do this without running out of cash if everyone suddenly wants to withdraw their money at the same time? That's the tricky part. The bank relies on the fact that people usually don't all come asking for their money at once. It's kind of like a pizza place, assuming not everyone will order a pizza at the exact same second. Still, if too many people do rush in, the bank can get into trouble. Remember the bank runs in history? That's when the illusion of infinite money from thin air meets reality. And here's another fun bit. The money the bank creates isn't physical cash. It mostly exists as numbers in accounts, like digital IOUs that help keep the economy humming. So technically, banks are just typing money into existence, backed by trust and rules. But how does this affect you? What does this mean for your savings, your loans, and the economy overall? That's where things get really interesting. What does this mean for you? Well, when you take out a loan to buy a car or a house, you're not just borrowing money that someone else physically handed over. You're borrowing money the bank created by promising to keep a fraction in reserve and lending out the rest. That's why banks can lend more than they actually have in cash. This system keeps the economy moving. Businesses get money to grow. People get loans to buy things, and money keeps circulating. But it also means the total amount of money out there can grow or shrink pretty quickly, depending on how much banks decide to lend. Here's where things get even more interesting. Because banks earn interest on loans, they have a big incentive to keep lending. That's good for growth, but can also lead to too much borrowing. Think of it like eating one slice of pizza. You're good. But if you eat 10 slices because the pizza's free, you might end up with a stomachache. Similarly, if banks lend too much, it can lead to bubbles and financial crashes. And remember, this whole system is tightly controlled by central banks, like the Federal Reserve in the US. They set rules about how much banks have to keep in reserve, and can even create money themselves by buying assets or lending to banks. So it's like they're the referee in this money game, making sure things don't get out of hand. But sometimes, even the best referees can't prevent chaos. If everyone suddenly wants their money back, a bank run, or if lending goes wild, the system can get shaky. That's why governments sometimes have to step in with bailouts or guarantees to keep trust alive. So, in conclusion, banks don't just sit on your cash. They use it as a tool to create more money by lending most of it out again and again, kind of like a money-making echo chamber. This system is what helps fuel economies, but it also comes with risks if lending goes too far or everyone panics at once. It's all built on trust, rules, and a bit of financial wizardry that keeps the economy running. And yes, it's totally normal for money to come from thin air. If you want me to make other videos explaining these topics, please like and subscribe. Thanks for watching.